Today, and today we'll be discussing about the SIN, okay, country India version. Okay, so SAP has given separate tax modules for specific countries like India, Brazil, these countries. Okay, earlier we used to have SIN consultants. Okay, SIN used to handled by separate consultants called SIN consultants, like a module. But after the recession, what they have done is they have broken the SIN into three parts: FI, SD, MM. And now SD consultant has should handle SD SIN, MM consultant should handle MM SIN, and FI consultant should handle FI SIN. Okay. But earlier it used to be handled by one consultant called as SIN consultants, but we don't have SIN consultants now. So SIN country India version, SIN is specifically only for India. Okay, and SIN consists Indian taxation, and SIN is applicable only to the clients who implemented SAP in India, within India. That's it. Okay. Well, the reason is in India we have complicated taxes, like say excise tax. So you go to a restaurant, have a dinner, then you will understand what is the complicated tax we have, right? You might be realizing for the bill for the you ordered 1,000 rupees, but the bill would be close to 1340 to 1400 rupees. This is tax. You don't understand why they are charging that much tax. Okay, so best example is the restaurant bills. So we have some complicated taxes in India, charging tax on tax, tax on tax. So we have excise duty. On that, excise duty is close to 14%, I guess, 14.3% or something. On that, they charge education cess, that is 2% or something. And again, they charge secondary education cess, that is again 1% or something. Now they are charging Swachh Bharat tax, that is 0.5%. And now again, they are charging Kalyan Lakshmi cess. So tax on tax, tax on tax, tax on tax. So this is a confusion among the this particular Indian taxation. Okay, but see, whatever the government is doing is good. Why they are collecting the secondary education cess? By because in the rural India, many places in the rural India, there is a school dropouts by seventh only seventh standard. There is a school dropouts. Why? Because they don't have the primary schools. Okay, they have only primary schools. They don't have secondary schools in their villages. So after seventh, they just drop out the schools. So to eradicate this, what government has done is they charge secondary education cess, and this amount should be spent only in putting this particular new schools where it is stopped with 7, they need to continue up to 10th, like this. The idea is good, but I don't know how best it has given the results. Okay, so what are it's doing, it's good, it's for a purpose. Swachh Bharat, it's for a purpose, but how it materializes by end of the day, whether they use these funds exactly there itself or they deviate the funds, that is a question actually. But anyway, we are not concerned with that.
Praveen,
Yeah, go ahead.
Praveen, you're recording the video?
Yes.
Okay.
Let me one second check it. Yeah, recording. Okay, so this is like we have the taxations in India, and the Indian taxation goes like this. We have CST and VAT. VAT is a tax which is collected when you do a transaction between state to state. Sorry, within a state. Say suppose in Tamil Nadu, if I sell something from Chennai to Salem, then it is a VAT. But if you do a transaction between Tamil Nadu and AP, Andhra Pradesh, then this is VAT. This tax go to the central government. Okay, the transaction within the state goes to the state government. But now there is no this kind of taxation. There is only one taxation, that is GST. Everything goes to the central government. From there it will distribute to the states. Okay. Yeah. So complicated taxes. So what are those complicated taxes, and what is a tax? What is excise duty? So let's see this first. Let's better understand these things. So excise duty. Okay. So excise duties. Excise duty is levied on the goods which we manufacture. That means Suppose say we have Tata. Okay, Tata manufacture cars and they sell cars, but Tata has manufactured some truck or a crane. They have manufactured a truck or a crane to use internally. This particular crane or the truck what Tata has manufactured, they don't sell it to the customers. These are for their internal purpose to move the cars within the plant. Okay. So do Tata need to pay tax on this product or not? It has to. Why? Because excise duty is levied whenever you manufacture something, whether you sell it, whether it is for your own consumption, anything. Excise duty is levied when you manufacture the goods. Okay. So generally what happens, we charge tax. uh, this is excise tax when we charge. So when you do a transaction, when you sell, then it's called as sales tax. When you give service, it's called as service tax. These are the tax which we know. Why? Because we would be seeing every day. But excise duties are paid by the companies. Okay, excise duties are paid by the companies when they manufacture the product. So automatic, you manufacture some goods, whether you sell it for your own consumption or anything, you have to pay. You have to pay excise duty to the government. Okay, say suppose I have a plant. There is a plant. Okay, some goods. There is the truck has come and the truck is loading the goods onto the plant. Okay, so okay, the loading has been done, but they need to the truck driver has to collect some documents. Well, because you might be seeing, right, the documents whenever we do delivery, the truck drivers might be carrying different color documents: white, yellow, pink. It's a standard actually: white, yellow, pink. Each document tells something. One is waybill, one is delivery challan, one is pro forma invoice. Okay, the standard colors across actually. This is the documents what they carry. And very interesting question also. Please try to find out the answer for this question. And this question was asked in many interviews. That is, what are the documents a truck driver carries when you do the delivery? Okay, when you do a delivery, what are the documents a truck driver will carry? Okay, just see whether you can find an answer for that. Okay, so what happened is, okay, the goods was loaded onto the truck, but he need to collect some more documents. Okay, he thought that by the time, okay, there is a petrol, he need to fill the fuel. So there is a petrol station 1 kilometer just away from this plant. So he thought that he can go there, get the fueled up and come back and collect the documents. But if an excise guy is sitting 1 meter away from your plant here, okay, if an excise guy is sitting 1 meter away from your plant gate here, and if the excise duty is paid on this goods is fine. If it is not paid, he can seize the truck here itself. You are not supposed to move any goods even an inch out of the plant without paying the excise duty. Without paying an excise duty, you cannot move the goods out of the plant. If it is moved and there is any department guy, he will seize the truck. Okay, he will seize your goods. Okay, so excise tax is levied when you manufacture the goods. It's automatically levied when you manufacture the goods. Okay, so excise duty, it's a duty which we levy on the goods which we manufacture, and actually the product is liable to excise when we manufacture, but our convenience in SAP system, what we do is we charge this tax at the delivery time. Okay, we charge this tax at the delivery time because for only our convenience. Okay, and without charging the excise duty, you are not supposed to move the goods outside of the tax, and the process runs like this: order, delivery, invoice, and excise invoice. We have three invoices, right? Excise invoice, commercial invoice, and pro forma invoice. This is the commercial invoice. This is the excise invoice. Excise duty is not related to sales. Okay, excise duty is related to manufacturing. So what all the excise duties we have? That is basic excise duty, BED, ECS, education cess, secondary education cess. At the time I have written the document, it was only up to this, but now there is Swachh Bharat tax, Kalyan Lakshmi tax. Okay, at that time there was no these two tax. If you see in my notes, you will be finding only these three, not these two things. Okay, so we have these all tax. These all are the excise duties. Okay, so what kinds of excise duties we have? Like these are basic excise duty, and we also have some other excise duty, three different duties, that is AED, additional excise duty, SED, special excise duty. Okay, see these excise duties BED, ECS, SECS, Swachh Bharat, Kalyan Lakshmi are mandatory. They are mandatory for any organization. You manufacture from pin to aeroplane, these are mandatory. But this additional excise duty and special excise duty are only specific to some products or some industries. Some products or some industries. When I say products, what products? Additional excise duty is applicable for only some industries like tobacco or beverages which manufacture the liquor, alcohol. Why? Because there is some like say they hamper somewhere the people health or somewhere, so they collect this tax and they spend it on some other things to for people well-being. Okay, additional excise duty is only for few industries. Special excise duty is again for only few industries. It is also applicable, like it depend upon the material you manufacture, okay, or the industry you are into. Okay, so these are the taxes.
Hello, Praveen.
BED, AED, SED, but BED is the standard, mandatory, AED and SED is the optional.
Hello, Praveen.
Yeah, go ahead.
Praveen, this KL is basically there is one Krishi Kalyan tax also, no?
Yeah, this is what Kalyan Lakshmi or Krishi Kalyan. That's what it is.
Okay, it is same.
Yeah, sorry. In Telangana we have one thing like Kalyan Lakshmi, so I was inclined to that, but it was Krishi Kalyan tax, KL. Krishi Kalyan.
Okay.
Okay. Yeah. So this is what an excise duty is. But when you come to sales, there we levy. That means whenever a sales transaction is performed, when you sell some goods to customer, then sales tax is levied. Okay, sales tax is levied, and sales tax we have CST and VAT. So you know what is a CST? It's a transaction between two states. VAT means the transaction within the within the state. Then we have service tax. Whenever you render some service, okay, then you have this particular service tax. So service tax we have ECS, SECS again, like say service tax, education cess, secondary education cess, these all things we have again. And sometimes we also have some TCS, tax collected at source. We know TDS, right? Tax deducted at source, but we also have tax collected at source. Most probably they would be using for scrap materials or something, this TCS. Okay, so this is what a small introduction about the tax and how it is. So coming to the SAP, we can configure the taxation in SAP in two ways. One is formula based, one is condition based. But now there is no formula based, it's completely ruled out. Until now actually it is outdated, but it is completely ruled out now. Before GST it is outdated, but now it's not into existing. It's gone away. Okay, so but anyway, so we can configure SIN in two methods. One is formula based and one is SIN based. Yes.
Praveen?
Yeah, go ahead.
But when we do the tax INJ to when we do the tax INJ to tax and migration,
okay, go ahead.
So in that case, one should know the formula-based pricing procedure, because we don't change the pricing procedure. We take the same pricing procedure which was being used in formula-based, and we do the changes in the condition type. Means we go to the pricing procedure and do the changes,
Yeah.
in the controls of the condition.
Yeah. See, we will also have some idea on this, but see, in the training scope, we will be learning how to configure condition technique. We will not be learning the migration. Why? Because even I haven't worked on migration. Why? Because this migration has
No,
just come
I'm
just
not
3
telling
months back.
migration. I'm not telling about
Okay.
migration. I'm telling that
Hmm.
one should know the
Yes, yes,
formula pricing
definitely.
procedure, how to.
That's the reason we will learn what is a formula based. We will also learn what is a condition based. Both we will learn. Okay. In the
Because
interviews also,
if you're knowing how to
in the
configure,
interviews also they'll ask you this. Why? Because you need to migrate. They'll ask you. But as I told you, this migration has come
because
this year, and even I did not work, so I don't know how to do the migration. I know how to configure this. I know how to configure this, but I don't know how to migrate from formula to condition based. Okay. So we'll
okay,
learn.
if
But
you don't know how to
yeah,
configure formula,
go
if you
ahead.
don't know how to configure, then not migrate. Yeah.
Okay. Yeah. So formula based and condition based. See, formula based, see, why now you have lot of jobs for SD consultants and MM consultants in the market. The story until this year, until 2015, the story is completely different for SAP SD and MM recruitments. But the story from this year is going to be completely drastically changed, and you are seeing almost 40% hike in the job recruitments for SD and MM consultants. The reason is only sin, because until 2009, what all the companies in India implemented SAP, they have gone with formula based. Okay. And there are 50% of companies which finished their implementation for SAP before 2009 itself, and all the companies are running on formula based. But if GST has come, SAP will not support this formula. They need to implement only condition. Okay, from 2009, SAP has forced all companies to implement only condition based. Okay, that's fine. But still there is 50 to 60% of companies which implemented SAP before 2009 running on formula based. Now they need to migrate mandatorily. Why? Because GST is a reality now. It's implemented in India. They need to migrate from here to here. So that's the reason you're finding a lots and lots and tons of jobs for SD consultants. Okay. So formula based. So what is the basic difference between these two is formula based excess duty determination will be based upon formulas. Okay. And condition based excess duty will be determined basing upon condition technique concept, which is the heart of the SAP. Okay, we here completely on the formulas, and here it is on the condition technique. So the tax procedure for the formula based is tax INJ, and for condition based it is tax INN. See, until now, whenever you go to the interview, one question they will for sure ask, that is, what is your tax procedure? Why? Because with this tax procedure itself, they can understand what area of sin experience you have. So this used to be a mandatory question in every interview. Every interview, this is a mandatory question. What is your tax procedure? When you say tax INJ, they know what area of tax you work, that is formula based. If you say tax INN, they know what area of tax you are working. Okay, but I hope they may not be asking this question from now. Now it's only tax INN. So what is the conceptual difference between a formula and condition based? What is the conceptual difference is, in formula based, there is a relationship between the sales procedure. In the sales procedure we have, right, RV0001, our sales pricing procedure. There is a relationship between this particular sales procedure and the tax procedure. But here, there is no relationship between tax procedure and your yeah, no, there is no relationship between this particular tax and sales procedure. So that is a conceptual difference, the majorly. Okay, so let's move on. See, I hope I haven't shared the document handwritten with you guys, right? So I'll be sharing the document to you. So what all I'm discussing, everything is documented in that, so that you can just give some good reading, you'll understand everything. Okay. So, what is the business process we have in sales and distribution SD module, third party consignments, IPO, intercompany billing, OTC, like this, right? Like that, we also have certain process when it comes to the SIN. That is factory sales, depot sales, exports, and deemed exports. Okay, so these are the processes what we have. That means we can configure SIN in these 4 different processes. So first let's see what is the factory sales. So factory sales. See, some companies have, or some companies sell directly from factories, right? BHEL, they may not be having a store. BHEL directly sells from the factory, okay? Or many products, many companies sell their goods directly from factories, okay? So when you order from factory, so how the tax should be collected and how it is handled. So factory sales, that is selling the goods to the customer directly from the factory itself. And the process runs like this: order, delivery, billing. Billing means it's a invoice. Okay, order, delivery, and billing. Then after, you raise an excise invoice, excise invoice. So how do you create an excise invoice in SAP? That is through a transaction code J1IIN. It's a challenge to remember the transaction, these T codes in a SIN. They're so lengthy T codes, 5 digits, 7 digits also sometimes, very lengthy and very important. In the interviews, they will be asking these T codes majorly. If they ask 5 questions coming to SIN, at least 2 would be T codes out of that. Very important. Okay, so how you can raise a excise invoice with a T code J1IIN. When you raise a J1IIN, accounting entry document generates. So whenever we create some transaction in sales and distribution, accounting document generates, right? That is accounting document, customer account debit to revenue account credit. Likewise, here also an accounting entry document will generate, that is SENVAT, suspense account, debit to BED, ECS and SECS credit. Okay, so this is the accounting entry document which is generated. Okay, so this is factory sales. So factory sales runs like this. Next, depot sales. Depot sales. See, if you want, depot sales means you are selling something from depot. Okay, but from where you will get the goods to the depot? We have learned STO, right? STO process is nothing but transporting the goods from plant to plant, plant to depot, depot to depot. So if you want to sell the goods in depot, but from where you will get the goods here? That is through plant. You manufacture goods at plant and you deliver it to depot, and from here you send it to customer. This is called as depot sales. So depot sales is like this. Suppose say I have a plant in Bangalore. My plant is in Bangalore. Okay, and my depot is in Hyderabad. So how you will transport those goods? So the standard process, you know, that is STO. Okay, you will do the STO and send these goods from Bangalore plant to Hyderabad plant, right? But the complete process, how it reach the end customer, that we will see now. So the process is, first is plant to depot, how the goods will reach from plant to depot. A PO is raised from depot, then after plant do a delivery with reference to the PO, VL10D, then after they raise a pro forma invoice, right here, pro forma invoice. Then next they will raise a excise invoice, J1 IIN. Now the goods is at depot. So when you receive the goods, you know, right, we do MyGo. In the STO process, we do MyGo, then only stock will be added to the actual stock. So this is first. The next is a depot to sales. It's very important in interviews also, they ask this. Okay, in the depot sales, after you raise a PO and receive the goods, what activity you do there? So what activity you do here is, you create MyGo, you capture the goods, and you also capture this particular excise tax here. That is through a transaction code J1, sorry, J1IG. J1IG is the transaction code through which you will capture excise tax at depot. You will capture this excise tax. Why? Because you want to pass on the tax to the customer. Okay, why? Because companies will not bear this tax. Companies later will pass on this tax. See, if a company is manufacturing product for 1,000, but why they are selling the product to you for 1,300? Because their profit and all the taxes what they have paid, they are collecting it from you, right? So once after you capture the excess duty here and you capture the goods with MyGo here, when you do a sale, depot to customer, end customer, when you sell the goods, process goes like this: order, delivery. When you do delivery itself, what you will do, you will distribute whatever the tax you collected. Suppose say the tax what you captured here is 1,000 rupees. You will distribute this particular tax equally among all customers. So 10 goods, 1,000 rupees tax has been collected. For 10 goods, 1,000 rupees tax has collected. Now this customer has ordered for 5 goods. So what is the tax you will be passing on to him? 500 rupees. Proportionately you will pass it. And what is the transaction code for that? J1IJ. This is J1IG and this is J1IJ. You capture it with J1IG and you distribute it with J1IJ. And delivery, then after invoice. That's it. This is the depot process. Okay. Then next, export sales. Export process. How exports? Third process. Export means you are selling these goods, whatever you manufacture, to the customers who are outside India. Okay, we are selling these goods to the outside customers. So export process is again subclassified into 3 types. One is exports under bond. Then next, exports under LOU, that means letter of undertaking. And C, third one, exports under rebate or no bond. Rebate or no bond. So this exports is further classified into 3 types, that is exports under bond, exports under LOU, and exports under rebates or no bond. So exports under bond, let's see what it is first. So exports under bond is you want to do an
deemed exports. Deemed exports.
Deemed exports. It's a different process. Exports and deemed exports is a separate process. Okay. So and Gaurav, the other guys might be confused. If you have some question, why? Because you already know the concept, so you are asking, but the other guys might be carried away with this and these things. If you have any question, put it on the chat box. Later I'll respond to you. Okay.
Okay, okay.
This is very complicated concept which no others will not be understanding this concept. So they might be feared or they might be carried away with the questions what you ask.
Okay,
So
okay.
yeah, any questions you put it on the chat box or Skype, I'll answer to you. So exports under bond. Well, because this is very first time these guys are listening to these terms. I hope Srini, you also don't know this, right? I know Srini also don't have any idea on this, I guess. Srini or Meenakshi also, both, who is already working. Yeah. So this is the first time you are introduced to this concept. So let us, but Gaurav has good knowledge on this anyway. So Gaurav, appreciate if you share your knowledge.
Yeah,
Okay.
Praveen,
Okay.
definitely.
Yeah. So why? Because now without sin, you will not even get an interview call. Forget about interview. You will not even, your resume itself will not scheduled for an interview or shortlisted if you don't have sin in your resume. Your resume itself will not shortlisted. Okay. So first is exports under bond. Okay. Under the exports, the third process, but under it is classified further into three exports under bond. So first of all, what is a bond? What is a bond? Bond is nothing but it's an agreement between company. In general standard, bond means it's an agreement between two parties, right? For said amount or it can be anything. But here in this case of sin, bond, it's an agreement between the company and excise department. Okay, it's an agreement between the company and excise department to do the exports without paying excise duty. Okay, why? Because see, when company will get money after a transaction, sales has been done, but companies may not have that money to pay initially. When and why government is allowing these companies to do export without paying the excise duty? Because when you do exports, foreign currency will come into the India. Government want foreign currency to fill up its current account, right? They want dollars. All exports will be in dollars. Government want dollars. So how dollars will come into India when you do exports? Okay. So that's the reason government want to encourage the companies to do exports by not paying the excise duty initially. But later, once you do the sale and you get money, at that time you can pay. But what up to what value you can do the exports? That depends upon the value. Like say, it will give some validity period. Okay, you can do exports this period to this period and up to this amount. Okay, this is what government will give option to the companies to do the exports, so that foreign revenue will come, dollars will come into the India. There will be a good dollar circulation. So to get a bond, if company want a bond, that under the process, exports under bond, if company want a bond, so what companies has to do is they need to maintain some security deposit with the, suppose they want a bond for 10 crore. At least 10% of that they need to maintain a security department with the excise department. Okay, 10%, 1 crore. You put 1 crore as a security department with the excise department, they will give you 10 times exposure. That means you can do exports up to 10 crores. Okay, so that is under bond. Exports under bond. Okay, and how this process runs, this exports under bond runs is order, delivery, invoice, then next you raise excise duty, sorry, excise invoice. Under when in the system, when you create excise invoice, you have to select bond. That means you are doing your exports under bond. And how do you create excise invoice? J1 IIN. Okay, this is a trick code what you create with J1 INN. Okay, so once you raise an excise invoice, then after you need, there is one more document called as ARE1 document. So these are a lot of tax documents actually, which you may not be even seen or heard of this terminology until now. Okay, these are the documents which they will be using in the business, tax, accounting, and these things. So there is a one document called ARE1 document would be raised. And how to create a ARE1 document? The T code is J1IA101. As I told you, weird T codes. It's a challenge to remember the T codes itself. J1IA101. Okay, so this is a T code what you will be creating a ARE1 document. Okay, and bond master. So once you create this ARE1 document, it has some processing modes. Okay, an ARE1 document has processing modes. Processing mode in the sense, like, see, when you create an email and you click on send button, what happens? What system will show? If you are attaching, it will show that attaching, then next sending, last send, right? It will give you the log, it will give you the status, like that. Processing modes: create, post, update. Okay, like this. So when it reaches the update has further activities. Okay, update have further activities, that is, okay, activities, that is, you send this document to customs, and this document got countersigned by the customs, and arrived back from customs. After countersign, you received this document back from the customs, and you send this document to excise department to show them confirmation. Then next, exports has been confirmed. Okay, so these are the activities which will be triggered when update has been done. Okay, so if you want to create a ARE1 document, you need a master called as bond master. And in exports under bond, while you create excise invoice, you have to select bond, like this one. Okay, and when you create when you create exports under bond, system will not generate any accounting entry document. Okay, why? Because you are not paying any tax, right? So there is no accounting entry document generated there. This is the first type. The second is exports under LOU, letter of undertaking, LOU. So LOU means it's a temporary permission. See, certain times what happens is there might be a long weekend holidays, but you want to do some exports very immediately, and banks are closed. You cannot show security deposit of 1 lakh or something. So certain times you have this sudden thing, then you can go with undertaking. Okay, so you'll take undertaking is nothing but it's a temporary permission you take from the excise department to do the exports, paying excise duties up to only certain balance. Okay, the balance is called as RG23. Okay, up to RG23 balance you can pay the fees and you can do the exports. It's only a temporary, only for one transaction. Okay, so the process goes like this for exports under LOU. Invoice, sorry, order, delivery, invoice. Then next it is excise invoice. So when you create excise invoice in this particular LOU, you need to select LOU here, letter of undertaking. And you create excise invoice, you know the transaction code J1IIN. Then next you create a ARE1 document here. The transaction code is ARE1 document, that is J1IA101. Okay, ARE1 document. So here you need to select letter of undertaking. Then same, it has activities, processing modes. Same processing modes: create, post, update. And when you create an update, it has activities: sent to customs, countersigned by customs, arrived back, you send this to the excise, and exports has been confirmed. Okay, this is the second process. Third process, rebates or no bond. Oh my god, it looks like Trump is winning. He's very close to magic figure Trump. Okay, so exports, IT industries has to worry now. Exports under rebate or no bond. What is rebate? Which you claim later, right? Rebate means which you claim later. Likewise, even here, you pay tax first, but you claim later. Within 6 months, you can claim it. TDS. TDS, it's deducted from your bank or salary or something, but you can claim it later, right? With the proper documentation like this. So, if you don't have bond or you don't have LOU, letter of undertaking also while doing the exports, then you have to pay excise duty, obviously. But whatever the excess duty you paid under this rebate or something, you can claim it back after 6 months. Okay, you can claim it back after 6 months. And the process goes like this. It's the same process, but only the thing is you need to select excise invoice there as no bond. That is order, delivery, invoice. And when it comes to the excise invoice, here you need to select no bond. And same ARE1 document, processing modes create, post, update, and when you say update, again activities goes on, sent to customs, countersigned by customs, arrived back, sent to excise, exports confirmed. Okay, but in exports under bond, when we create excise invoice, system will generate an accounting entry. Why? Because you are paying tax here. Okay, you are paying the excise tax, so system generates a accounting entry here. Okay. So this is the third process what we have: factory sales, depot sales, and exports. The last one is deemed exports. Fourth process is deemed exports. See, I hope you guys might be knowing SEZs. What is SEZs? This is a buzzword now in India, right? What is SEZ? Anyone? Do you have any idea? Special economic zones. SEZs, special economic zones, are EOUs, export oriented units. That means whatever you manufacture in this plant, you don't sell in India. All goods, whatever manufactured in these plants, are exported. SEZs, you ask companies, IBM, Capgemini, TCS, to set up their location in the SEZs, because TCS, IBM, who are their customers? Foreign customers, right? So when you do business, what happens? Dollar come into India. Okay, so SEZs, when you set up business in SEZs, government will give some benefits, tax exemptions. Why? Because you are promoting exports and you are getting foreign revenue dollars to India. Okay, why? Because the only way how India get dollars is through exports. But whatever the payments India has to do, that means government has to do for oil, gold, or any imports, they have to pay with dollars. That means if your exports are good, you can pay easily. If not, you will have a current account deficit. Okay. So deemed exports. Deemed exports are nothing but selling the goods to the customers who are not located in India. Okay. That means the companies, the units we manufacture in India, but we sell this to the customers who is outside India. Okay. Like special economic zone, or what we call EOUs, export oriented units. So this is deemed exports. So the process for deemed export goes like this: order, delivery, sorry, invoice, excise invoice. So when you create excise invoice, you will be selecting as deemed. Okay, it's a deemed, and J1IN, the transaction code for this. Then after you create a document which is called as ARE document, ARE3 document. Okay, and ARE3 document again has two licenses. Okay, CT1 license and CT3 license. Okay, ARE1 document, this process again has two licenses, CT1 license and CT3 license. Okay, so how you create a ARE3 document? J1 IA301. This is a T code. It looks like some password or something. J1 IA301. So when you create an AR3 document, same processing modes, create, post, update, and when it reach update, it is activities are directly. Why? Because you need not to send it for these things. Why? Because this unit is set up itself for an exports, right? So directly it is countersigned by customs and arrived back. That's it. You need not to send it to excise again back. Why? Because there is no excise duty in this particular deemed. It's directly going there. So ARE3 document has two licenses, right? What is that? CT1 and CT3. CT1 license is a value based license. CT3 license is a quantity based license. Okay. So that means you'll be charging taxes or something, you'll be doing business either values or quantities, right? So depending upon what license they have, depending upon that it would be. CT1 is value license, CT3 is quantity license. And in deemed export process, when you create an excise invoice, system will not generate accounting entry document. Why? Because you are not charging any excise duty here in the deemed exports. Okay, so you don't have any accounting entry generated here. Okay, so that's it. We'll stop it here, but because we learned a lot for today, I can say your mind will be brought up to understand these all things. Meenakshi, I could say, like, yeah. Oh, you are working on this, Meenakshi, or you are not working on this? No, right? No. Okay, okay. Yeah, but it's good to learn. You are in those company, right? It's very good to learn SIN actually now. Okay, so yeah, any questions for today? And I hope I haven't shared this material to you guys. I will be sharing this material and also share one PPT. Just go through that PPT. And apart from that, I want to tell you one thing. I hope I have shared one material, Capgemini material to everyone, right? I hope everyone received, right? Can anyone confirm you received? I shared through Google Drive, a folder, Capgemini, all the PDFs.
So Praveen, I have not received.
You have not received? Okay, I'll share it. So in that you have a document called as ABAP for SD. Okay, ABAP for SD. Please read that document. It's not related to SIN or something. That is a technical thing which as an SD consultant, what all ABAP you should know. Okay, so please start reading that document from now so that you will understand as a SD consultant what all technical knowledge you should have and how you will communicate with ABAP and these all things. So read the document ABAP for SD. Okay, and this material SIN I will be sharing today, and advanced concepts also I will be sharing to you guys today. So what all we are discussing from today, it is completely different. Okay, it's not SD, it is completely different. And these are the secondary concepts, so don't panic or don't worry. Your core area is SD. Okay, 70 to 80% your core area is SD, and this 20% is to get better opportunities. Okay, so don't panic if you don't know this or if you are learning for the first time. No worries.